video journal to document the last trade that was taken on Monday, to review it, to go over it. We had a GU trade that was taken. We had an Fib sequence that was present. What we had was basically a liquidity sweep as well here on the 10M or whatever, 30M, it doesn't matter. We had a 10M liquidity sweep. I'll just put liquidity sweep. Liquidity sweep of Asian. Let's put Asian high. Asian high. 10 minutes Asian high. So we had that. Then we also had a Fib sequence that was present. Let's put this here. So we ended up coming here and sweeping. This was the Asian high here. We swept it, and we were anticipating continuational moves to the south side of it, the sell side of it, anticipating that it was going to come clear this low, which it eventually did here, which was great. So we are anticipating that through the liquidity sweep. We also had a clear break of our support and resistance, our dynamic support and resistance through the EMAs. We had a 50 and a 100 EMA rejection off of the 10M. Now, I will say that that was also present on the lower time frame, so I can write that, but that was not our main confluence, specifically because we hadn't even retested that at that point. So I'm not going to write that in yet. That was post move, not pre move. So we had a break below it, which was clear. That was really good. I could put a clear break below, whatever. But ultimately, this is where it started and stopped. And I'm going to go ahead and do this. Oh, actually, yeah, you know what was beautiful is we actually had two Fib sequences that lined up with this. We had a pull down here, a wave push here, a push here, a rejection of the 2.5, and then it came up to the 0 and rejected that. Now, we weren't sure because it did break a little bit above, but what we got beforehand, which was even more important, was an FS1. So we basically had an FS3 and an FS1 that's stacked. So we knew that if it was coming below this 0, which it did, then it was coming to the 618, 100%. So that was our directional move right there. We knew that was happening. And then secondly, we had the FS1, which was even better of a confluence because it followed our rules way better than the FS3 did. This came, rejected the 3.8, came down, rejected the 0. I thought this move had already taken off actually without me, but then I saw the rejection of this low, the break of this low, and was anticipating it to come back up to this level. Why this level specifically? So let's put 10M FS3 was what we started with, and then a 10M FS1, which is the most powerful one. And then what we're going to do is we're going to drop down. I think I even went down to the 1 minute on this one. We could have moved our stops a little bit closer, specifically because we knew that this was aligned with the FS3. If we know that it can't go beyond the 0 much more, we could have really moved our stops to say this, and that would have cranked us a 4.2, which would have been a lot better. But we placed stops in a healthy way. What we had here was on the 5 minute. We saw that it was going to come up. Wait, this is not the fair value. This is the 0 that I marked out. Now I did see, I think on the 2M, if I'm not mistaken, here, or the 1M. Where is it? Right here. On the 1M. It might have been the 1M. I'm going to do like this so we don't lose it. On the 1M, we had, we did have this fair value right here that it needed to tap into, but I put it at the 6.8 because Man, I really thought there was a fair value, but maybe there wasn't. It was just off of the 6.8. Also we had a rejection here, and I'll put that in here. I'll just put it on the 5M. And this is actually really important because I find that this is working really well. Is the rejection, if the EMAs, I'm going to put this, EMA lines up with Fib level. Let's do that. 5M EMA lines up with Fib level. Both of them kind of did that 618 rejection. It came and scooped that 5 minute, and that was beautiful. But we also knew it was going to come back up here because they had a 5 minute. 5 minute, 50. Actually, it's probably more visible on the 2 minute. Let's do the 2 minute. I'm going to do that. 2 minute. It was the 2 minute, I'm sorry. 2 minute, 50 Fib rejection. 2 minute 50 Fib rejection. What I mean by that is this was present right here, and I really like when this happens. It'll come to this 50 zone and it'll kind of reject down. This is an area of liquidity. It now created liquidity on the top side of this. This is where sellers stepped in right here. This is now, and I think I actually have these saved. Order block, fair value. Apply, save to. Oh wait, hold on. Yeah, I could put liquidity, something like that. Right. Let's save this so we can save to as liquidity. Liquidity. Right. So we'll just save that. Right. There's liquidity up here. So what happens is it created a 50 EMA, which is right here, or 50 Fib. I'm sorry, 50 Fib sequence, not Fib sequence, Fib. The 50 Fib is right here. It came and rejected this Fib and never hit the 6.8 at that point. Created liquidity above it, and it came and swept it at the 6.18. This was the perfect zone for this sell. And again, I like sells at the 6.8 because they do take off from there. So we had that. Yeah, we can do Fib rejection, liquidity pool. Let's do that. Let's do this 50 because we're gonna start using this 50 liquidity pool. Let's do that 50 liquidity pool. Hopefully remember that. But it kind of created a liquidity pool above the 50 and it came and swept. That was something that Column showed that I thought was really smart. Instead of trying to get in at the 50, you're going to come and take the 6.8. If it rejects the 6.8, then it probably take at the 7.1. If it rejects the 7.1, it's probably at the 7.86. So that gives you a pinpoint entry on the 6.18. The last thing that I will say is that the EMA lines up with a Fib. There was really no fair value or order block that was present at this level. Specifically, I don't think. I really won't call this an order block. Maybe it is. Maybe it is. This might have been. This could have maybe been. This could have maybe been an OB, but it didn't even tap into it. It didn't even really tap into it, to be honest. I wouldn't even consider that an OB. So there was really no other confirmations besides these, but my big ones were definitely the the 5 minute EMAs lined up. So that if I looked at the EMA on the 5M, it lined up with the 618. If I look at it on the 10M, obviously it lined up with 618 because that is the 100 on the 50. And then here on the 15, it lined up with the 100, 30. It lined up. Oh, it never lined up on the 30, right? So that was okay. But we were on the 15, we had a lineup. On the 10, we had a lineup. 5, we had a lineup. And 2, we had a semi-rejection of this. It was 1 rejection, 2 rejections, right? So that was fine. That was fine. That was actually kind of nice. The one end we had another. No, we didn't have. So it was just the 5, 10, 15 minute EMA rejections. Now that was coupled with the Fib sequences that were our big confluence. Those were our main directional biases. I will say that a we also had a trend line that was formed here, and that created a ton of liquidity as well. And oftentimes you will find, okay, hey, did this sweep? This kind of gave us an FS1, but it broke this high here. Now that I'm looking at it, I wonder if this would have lined up for an FS1 as well. Not really. No, no, because it broke the high this point. So no, this was not a 30-minute FS. But we had a lot of liquidity sitting down here because of the trendline break. Um, and so what ended up happening was we ended up shorting it. And again, that's why the BSTLs, they work, but they really have to be coupled with directional bias um, of the Fib sequence, because what you'll have is you'll have a break of trend line, and sometimes it'll come through and just create a new high, or sometimes it'll end up coming here and then creating a new low, which is what we like to see, the ABC correctional pattern. But there are times where literally it will come and it will break this trend line like this. Right, well, I guess I already gave that scenario. And then it'll just break the high. Like what we did was we broke this. And another confluence too was that this already broke this high. And if we're looking at it, oh, and I guess I could write this down because this was something I was thinking about. If we have a Fib sequence on the third, let's just do hour. Let's just do hour. And then we can remove all of this. Well, we don't need to. We'll stay visible with this. This was my zone. I was taking it to. If we have a Fib sequence, where do you think it's got to go? It's got to come at least down to the 382. It never even hit the 382, right? That was an additional confluence. It never did. So if it gives us a Fib sequence, it's coming down to the 382, if not this 50, right? And it ultimately did. It came down to 618. Now, it broke that low, right? And I don't know if this would even be seen as a Fib sequence anymore on the macro scale. It doesn't look like it did. No, it doesn't look like it's going to. I don't think it is. Okay. I don't think it's going to. But the point is, I knew that it had to come down lower, nonetheless. Like the buy was not ready until it hit at least 382 and then gave us reversal signals. So that was another confluence. I guess we could put that in there. I'll put 30M. Was not complete. Boom. Okay, let's just put that. And then, so we anticipated it to come down lower anyways on the macro level. So that was really it. Like this really lined it up, and it came perfectly. We followed our rules, which was really great. And one of those rules is that we are basically not breaking even. We're not moving our stops to break even until we came to that same support and resistance zone, which is why I wrote this up. And I said the minute it hits the support and resistance zone, we're hitting break even, right? And it did. It came. Once it's here, we put our stops to break even like this. It was a trade-free, risk-free trade, and then the rest is history. It came and closed down, so that was good. Yeah. Oh, also, I think I can highlight the moves from last night. We anticipated this move here actually because of the Fib sequence 1. However, it never gave us an entry. We were anticipating it rejected here and came up, and then it was in this zone. Now it did reject a 3.8, but it was here, and I was anticipating continuational buys from this zone to this 2.5. However, it never quite moved with a fib sequence or with a continuational pattern at that point, or it never gave us a deep pullback. It came to this 236 level, 382 level, and it never came and retraced back down to a fib sequence where I could find entry in order to continue upward. It never did. So we got caught having to wait, and it never gave us an entry on that. This would have also been an area for reversals. I don't know what time this was. Well, this was 11:30. I could have caught this. I'm praying about ways to find reversals off of these key areas, because we know it's gonna reject down here, right? We know that, and it failed to create a new hot low. We could have shorted this whole thing. We could have shorted this whole thing, you know, and we could have shorted it back to the zero, right? We could have done that. That'd have been a beautiful 6 to 7R, if not all the way down here. You know what I mean? Especially, let's look at this a little deeper. I know this is kind of running longer than anticipated, but it never gave us a full reversal signal by any means. But I'm curious to know. No, it never even tapped into like a fair value or an order block or anything. It just moved in a pattern that is familiar. Oh, also I wanted to highlight this last thing before I wrap this video up. Candlesticks. Looking at candlesticks, did it create any void here? This was the void. This actually gave me additional confluence, and I will write this in there because this is so important. This right here never got tapped into. This never got tapped into. This low right here, where this candle is, never got hit. It barely wicked near it, but it never closed it. And it basically, this was a magnet for us at this point. So it never came and closed that magnet. And I love seeing price do just that, where it creates these massive liquidity. And this was also a magnet. This could have also been seen as a magnet. We have a fair value there, right? This was a magnet for us, you know. We ultimately had a magnet in here too, and maybe in here. However, and I will say this, however, those fair values were not the magnet I'm looking at. But this right here, when you have a massive bullish candle like this, and price just spikes up, that's an institutional candle showing prices for reversal. Price has bought like crazy. This was another one here, but it got closed here. But this was another one. This was an institutional candle where price literally had nowhere to go but up, because there was a massive order that got placed. A massive order was placed right here, and we had to come and liquidate this, and then we shorted it. This was the institutional candle that was creating liquidity, or I don't know, but it allowed for us to see that this void needed to be filled, and so we were able to take off. Now, we did create voids up here that never got filled, right? But when I'm looking for sells or buys, I look for these institutional candles to show that there's a big void that needs to be filled, especially around the areas in which I need to fill them. If price takes off like it does here, I'm not anticipating it to come back up here, but if there are prices like below my entry, I can anticipate for it to close that void. Yeah, here, mama. So pay attention to the candlesticks closures as they are happening, so that you can find more confidence in that. And I'm gonna write that. Where's that last? Oh, did I close? Oh no, here it is. And I could put that. I'm gonna put 1M institutional candle magnet. Boom. That was that's on the money right there. I don't know why. Oh no, that's as far back as it goes. Okay, so that is the breakdown. We started at the 30-minute, 10-minute. This is where we got a majority of our entries. Before, we were doing a lot of the 10-minute fib sequences or 30-minute fib sequences with a 10-minute we're not finding them as frequently, so we kind of dropped down to the 10-minute fib sequences, and they've been very reliable. I still feel a little iffy about dropping down to the 5M, finding fib sequences. The wave pattern is not as clear um, on the 5 minute, but they do work, you know. They do work, but you'll see a lot of this choppiness in the 5Ms, whereas if you go to the 10Ms, you're not going to find as much choppiness. You'll see more clear wave structures. So it does move. The 5 minute will have fib sequences, but I think the 10M is kind of the lowest time frame I like to go to. Yeah, that's about it.